I know it doesn't look like it, but it is an II78. So a possible final flag. We had a couple IIs yesterday. Bar 49 was actually an III, and then we had an II71, and both were final flags. They did not lead to bull trend reversals, but they led to a halt of the selling. So we broke below it and sideways. Broke below it, sideways. The market tends to form patterns in clusters. So it tends to form a lot of OOs for several days, or a lot of expanding triangles for several days, or wedges, or double tops and double bottoms, or IIs. Well, the bulls, micro double bottom, 6, 9, but a bear buy signal bar and consecutive bear bars, and room to support the moving average, and then one or more of these highs. When you get wedge bull flags after gaps up, the market often retraces 50%. And there's 50%. I'll leave that in there. So reasonable for bears to exit a micro double bottom, but it's an 8-bar bear market channel. So probably not going up all that far. And we have magnets below. So I suspect we're going lower. That does not mean it's easy to do something, right? It's a weak buy setup, probably more sellers than buyers above 9. And we have magnets below. So those two things, plus we're already always in short. So I think we're probably going lower. I do not think 6 is the low of the day. By the close of bar 7, 50% chance we've seen either the high or low of the day. By the close of bar 12, 70% chance we've seen either the high or low of the day. By the close of bar 18, 80%. And pick a number. By the close of bar 50, probably 95%. By the close of bar 81, by the close of bar 80, probably 99.99% chance we've seen either the high or low of the day. So if I did not buy above 9, I did not. And it keeps going up. At some point I have to buy. So what do I want to see? I want to see more bullish behavior. Maybe consecutive bear bars closing on their highs. Broke below the II8, and we're at the top of the II7. Theoretically, bears give up, buy back shorts, one tick above the top of the II. But there's also that micro double top 5-6, another tick higher. So some bears will get up above 5-6. Since I think the market's in a trading range open, chances are we're going to run stops. Market usually goes below support and then reverses up, and tends to go above resistance before reversing down. So that 5-6 high is resistance. So you might have to get above that before the bears can, before the bears will sell again. I don't like this kind of behavior. Sideways for 6 bars, very tight range, because I want swings. And so I want stop entries and I want swings. And this is not a stop entry type of trading, and it's not swing trading. It's limit order trading, and it's scalping. So traders selling above things, selling more higher, scalping, buying below things, buying more lower, and scalping. Now, this is bar 10. 10 minutes left to the hour. Traders are thinking about how the first 60-minute bar will look. And right now, the bar opened here, and this is where we are. So right now, the first 60-minute bar is a perfect doji, neutral. We have that expanding triangle. Different ways to draw it. Let me get rid of that. Bears want the double top. They'd like to get a strong sell signal bar. For the bulls, this is a bull flag, and they want a good entry bar, so they want a good bull bar. But so far, it looks like a doji bar. We had a doji bar here and a lot of sideways trading, sideways for a couple more hours. Doji bar here, sideways for a couple hours. A doji bar is a 1-bar trading range. And after the first bar, we reversed down and we reversed up. And once you have a reversal, or true reversals after the first bar, I think of the market as being in a trading range open. The bears want a double top 6. They'll want a good sell signal bar 11. And the bulls are hoping that this is the low of the day. But they have a bad buy signal bar 9. They have an 8-bar bear microchannel. So I suspect we're going to dip below that 9 high. That there'll be enough bears selling as it goes up and enough bulls scalping out with small profits so that we should dip below that 9 high. The bears want 11 to close on its low for a double top bear flag 7. And the bulls want a bull surprise bar 11. They want a second consecutive big bull bar. Still always in short. So it's still more likely that this is going to be a double top bear flag 7 than it is that 6 is the sell climax and the low of the day. It's common to have a small tight trading range after a breakout. So we have a breakout, and the tight trading range tends to have a double top and a double bottom. It's breakout mode. Overall, I think it's more bearish than bullish, but I don't think it's very bearish. So it's not behaving the way a strong bear trend day typically behaves, and therefore this is probably either a weak bear trend or a bear leg in what will end up as a trading range. Remember, you have limit order bears who sold the 9 high and sold more higher. They need the market to dip below the 9 high to get out break even on the first buy with a profit on their higher buys, sells. So they need the market to dip below 9 where they've started selling, and they can buy back shorts, break even. Big magnet, open of the day. Bulls trying to prevent a big bear bar on the 60-minute chart. So they're trying to get bar 12 to close around bar 1 open or above the open of bar 1. And bears double top bear flag 7, but they'd like to get a good sell signal bar 11. You look at it, it's confusing. And that's simply your radar telling you that we're probably in a trading range and that there's danger buying too high, selling too low. And also that it's more of a limit order market and traders should wait for better signal bars. So for the bears, a double top bear flag, magnets below, and 50% pullback, the moving average, these highs, breakout points. And for the bulls, they're hoping we're in a small pullback bull trend and that 6 remains the low of the day. Okay, pulled back below 9 high, which was kind of obvious that we would do that. Will the bears buy back shorts and will the bulls buy? And will we resume up in a small pullback bull trend? Or will we continue down to the magnets below? R12 is always a little bit more important than other bars because it affects how the 60-minute bar will look. And that's true for all multiples of 12, 24, 36. So down to the first target, but I think we'll go lower. I think we'll test one or more of these highs. Remember on the open how I said today could be an outside down day? I don't think it will be, but if we start to get a series of bear bars, then we might get an outside down day. This is bulls giving up. The bulls who were trying to get the market to close around the open. They wanted bar 12 to close at the open, and they decided they could not do it, so the bulls are selling. And you buy wedge 1-6, pull back to the moving average, near other support, the 54 breakout point, the 50% pullback. It's enough of a bear surprise that most traders will expect at least a little bit more down. But if we get a really good buy signal bar 13, it will be a buy for the possible low of the day, wedge 1-6. 60-minute chart, big bear bar closing near its low. Sell signal bar for a double top. We just triggered the sell signal by going below the bear bar, below the first hour. But the market often will go one tick or two or three ticks below a big bear bar, reverse up, or one tick above a good bull bar and reverse down. So it's very common on the 60-minute chart to go below or above the bar and then go in the opposite direction. 60-minute chart to go below or above the bar and then go in the opposite direction. Since we have two more, I think, obvious magnets below, I think we're probably going to go at least a little bit lower. When you have these wedge bull flag opens, the wedges never look good. They never look like wedges. But if we get a bull bar 13, it's a credible candidate for the low of the day, even though we're not quite down to support. So bears will get out above a bull bar 13, and the bigger the body, the more it closes on its high, the more bulls will buy above 13, taking a chance that it's the low of the day, that it's simply a wedge bull flag. So gap up for the bull trend, and then a couple leg pullback, one pullback, two. So you can call it a high two, 1, 2. You can call it a wedge, 1, 2, 3. I would call it a wedge, but the bulls need a good buy signal bar 13, otherwise they'll wait. Bears are hoping that today will be an outside down day. They want the channel to continue down to below yesterday's low. Right now it's, maybe, 20% chance we'll get an outside down day, but the lower we go, the higher the probability. Not a good buy. Gap up, wedge down. Gap up, 3 lows. And became the start of a swing up. It ended up being the low of the day. 3 lows. We got a couple legs up. It was not the low of the day. It was the low for the next 5 hours, but not the low of the day. 3 big sell-offs, yet 3 sell-offs, pull back to the moving average. Bulls bought it. Better to buy above a bull bar here or here, and we got a swing up. 3 bottoms, 1, 2, 3. Big bear bar, pull back to the moving average. And it's also a 50% pullback. I don't have it drawn in, but it's about a 50% pullback from there to here. So that's exactly a 50% pullback. Now we're down to support. Next support, yesterday's low, 60-minute moving average. Market's deciding, is today going to be an outside down day? Right now, maybe 30% chance. That means 70% chance we're going to get a reversal before we get below yesterday's low. Still a possible wedge and a 50% pullback, and testing the breakout points above these highs. We gapped above those highs. Bulls want a bull bar, and they want a bull bar closing near its high. Here, a bear bar, it's better to wait to buy above a bull bar here or here. Bull bar, II. Can you sell the market? Well, this instant you can. It's it's always in short, a bear channel. But if you do, I would get out above 14 because of the possible wedge bottom. And if it's a bull bar closing near its high, bulls will buy, taking a chance on a swing up. If it's a one-tick bull bar, some bulls will buy, some will wait to see if the next bar is a bull bar. I had my finger on the trigger to take the buy. I was definitely going to buy if it was a bull bar closing on its high. If it had a one or a two tick tail, I probably would have bought. But with the bear body, I'm going to wait to see if 15 is a bull bar. We're getting close to bar 18. The market often tries to reverse around bar 18, starting at bar 16. Sometimes it'll reverse at 14 or 15, but it more often will put the low in around 16, 17, 18, 19, 20, somewhere around there. I would get out of shorts above 14 simply because of the wedge at all the support that I've been talking about. You could wait and get out of shorts a point above 14 or a tick above a bull bar. Maybe 15 will be a bull bar. And bulls, some bulls will buy. If you just look at it like a bar chart, it's a wedge. Three bottoms, 1, 2, 3. So you buy above the high of the prior bar. It's also about a 50% pullback, that little dash, and it's testing these breakout points. We gapped above those breakout points. What are the chances today will be a strong trend day, up or down? Probably not going to happen. For the bulls, we've sold off for 14 bars and we have a lot of bear bars. That reduces the chances that this is going to be a big bull trend day. And for the bears, it's been a sloppy sell-off with bad follow-through. That reduces the chances it's going to be a big bear trend day. So if it's not going to be a big bear or bull trend day, it'll either be a small or a weak bull or bear day or mostly sideways. Is it always in long yet? It's still always in short, but it's becoming always in long. Some traders will buy, if they did not buy above 14, they'll buy above 15, taking a chance that this is the start of a swing up. The more 15 closes on its high, the more bulls will be willing to buy above 15. And the bears who did not get out yet, more of them will get out above 15. And if we get two bull bars, 15, 16, you'll get even more bulls buying and more bears giving up. And that would increase the chances that we've begun a swing up. A swing means 10 bars, 2 legs minimum. It could be 5 legs, it could be 50 bars. But when traders are looking for a swing, in general, that's what they're looking for, at least a couple legs up and lasting 10 or more bars. So about an hour or so is the minimum. Bears, small pullback bull trend. Small pullback bear trend. We've had one pullback today, bar 10, and it was small. This is a second pullback. So they're hoping that we're going to get a measure move down. So we have a breakout at 12. The bears are trying to keep the body of 15 from overlapping the close of 6. On a line chart, there's a gap there, and the bears are trying to keep that gap open. If the gap closes, the chart becomes less bearish. The bulls have a better chance of getting a swing up. So good for the bears. Okay, we still have a gap between the bodies, these bodies and these bodies. And we have a weak buy signal bar 14, weak buy signal bar 15. So we still might go down for a measured move. That would get us to the 60-minute moving average. Now, some bulls bought above 14, even though it's a bear bar. And will they get out below 14? Some will. Others will buy more, betting that this is not going to be a big bear trend. What do we know? If you bought below 1, you made money. If you bought below 6, you made money. If we go below 14, what's going to happen? Bulls are going to buy below 14. Also, a lot of really important support down here. Yesterday's low, 60-minute moving average. So, also the sell-off itself, up to this point, is not all that bearish. So bears are not going to sell on a stop below 14. They sold below 1, but they scalped. They sold below 6, but they scalped. How do I know they scalped? It didn't go down very far. So they sold, they took quick profits. Bears, they want the small pullback bear trend to continue. They want another low 1. 15 is the sell signal bar for the low 1, but it's a bull body, and we already have a wedge. So not a good sell. They're trying to make another attempt, bar 17. All of the reversals, all of the tails, it creates confusion. It reduces the chances that today will be a big trend day. And it represents traders taking quick profits. It goes below something, bears sell, bulls buy. And when either side gets a small profit, they take the profit. And the result is lots of little reversals. You can see we're closing the body gap. There was a gap between these bodies, and this is closing it. So that significantly weakens the bear case. If we get consecutive bull bars, one with a big body closing near its high, both closing above the moving average, then always in long by the close. But because of all the reversals, you still need to stop below 14, and bulls will be pretty quick to get out if they become disappointed. So is this the start of a big bull trend? Probably not. A bad buy signal bar 14, a bad follow through bar 15. So right now we're probably always in long, but so far it's not strongly bullish. Wedge bottom, we should get a couple legs up, possibly for an hour or more. This was resistance, so might be resistance again. Yesterday we had a bear channel, reversal up, lower high, lower high, lower high, lower high. And here, lower high, and bears want lower high here. But what's different is we have a wedge, bull flag, and a 50% pullback. And now we have consecutive closes above the moving average, consecutive bull bars, one with a decent sized body and closing near its high. So probably buyers not far below 17. The bears want a lower high and a bear channel. Surprise bar up 16. That also increases the chances that we'll have at least a small second leg sideways to up. So can you sell below 17? Of course, it's a bear channel, and if we get a bear bar, you can do it. I would not, because we'll probably get a second leg sideways to up, and therefore there probably are buyers not too far below 17. Remember, 14, bad buy signal bar. Why is that important? Well, bears will sell 14 high, sell more higher, confident that they can get it back below the top of 14. So at some point in the next hour, we're probably going to fall one tick below the 14 high. What happens if we get 2 or 3 more bull bars? Then we probably will not fall below the 14 high. But at this moment, we're probably going to fall below the 14 high. Bad buy signal bar, bad buy signal bar. 2 good bull bars fell below the buy signal bar high. Pulled back below the bad buy signal bar high. Bad sell signal bar. Eventually get back above the sell signal bar low. Bulls, reasonable to exit below a bear bar. Reasonable to exit a point below any bar. And for the bears, they're hoping this is a bear channel and that will go all the way down below yesterday's low and get an outside down day. But we have a bull surprise. 16, we just went always in long. Probably buyers below. They might buy at the 17 low, but I think it's more likely that they'll buy around the 14 high. So the bears selling know the market is always in long, and they know we're probably not going down all that far. They're hoping we get below the 14 high, and if we do that, they're hoping it'll continue down to below yesterday's low, but they know it probably will not. Bulls will try to get a high one buy signal bar, 18, but I think it's better for the bulls just to get it over with. Let the thing drop below the 14 high, and then look to buy a reversal up. Head and shoulders bottom, left shoulder, head, right shoulder. Whenever you have a reversal up from a wedge, you're looking for 2 legs up, 1 pullback, 2. That pullback is often the right shoulder of a head and shoulders bottom, where the second leg in the wedge is the left shoulder. Wedge, 1, 2, 3. Expect 2 legs up, 1 pullback, 2. The pullback is often the right shoulder of a head and shoulders bottom. The second leg down in the wedge is often the left shoulder. Wedge, 1, 2, 3. 2 legs up, 1 pullback, 2. The pullback, right shoulder, second leg, left shoulder. Pretty flat, but the same idea. Another example. Can you buy above 18? We're always in long. You can buy at the market. You can certainly buy above 18 if it's a pretty good bull bar. But if it's anything other than a pretty good bull bar, chances are we're going to work our way down to 1 tick below the 14 high. It could go more than 1 tick, but that's the minimum objective for the bears. Will bears buy back shorts 14 high, or will they hold and sell more and try to get the day to go outside down? I think the market will have a hard time going below the 60-minute moving average and yesterday's low. Look how much time we spent yesterday at that price. So I think we'll probably, if we go lower, probably buyers not far below 14, probably buyers are on the 60-minute moving average. We got exactly to the 14 high. So if you're a bear and you sold the 14 high and sold more higher, it did not fill your order to buy back your shorts. If 19 is a bull bar, you'll probably get out of your shorts. And bulls will buy. They're looking for a bull bar for a second leg up and possibly a swing up to the high of the day. Bears are selling, trying to get it at least 1 tick below the 14 high. And then we'll see. Will they suddenly buy? Will the bulls have a lot of limit orders to buy there? Will we get a reversal bar 19? Or is this going to be a bear channel and will we go outside down? Okay? Bears can buy back shorts, break even. Are they going to buy back shorts or are they going to sell more, trying to trap the bulls who just bought at the 14 high? Can the bears get a strong break below the wedge bottom and then a measured move down, which would be to below yesterday's low? Probably not, but that's what they want. So they want this. Bulls are looking for a good buy signal bar. Not bar 9, not bar 14. The bulls don't care if we get a reversal up from above 14 or from below 14, but they want a reversal up and they want a good buy signal bar. Can you sell at the market here? Now, I think if you were selling, you sold below 17 or 18. I don't want to sell here. This is a price where bulls might buy, 14 high, 14 low. When the market's in a bear channel, it's better to sell rallies than to sell at new lows, because if it's in a bear channel, bulls tend to buy at the old low and buy more lower, and they usually make money. I put this here because it's important. Today could be an outside down day. Yesterday was not especially